Hello and welcome. Today, we're cracking open the story of an absolute giant in the business world. We're talking about SABMiller, and more specifically, the incredible high-performance engine they built inside that company. All right, let's get right into it. And when I say giant, I really mean it. Get this. In 2016, their rival AB InBev paid over $100 billion to buy them. I mean, that's just a staggering number, and it immediately tells you there was something seriously special happening inside this company. So the big question we're tackling today is pretty simple. What on earth made them worth that much money? What were the specific decisions, the systems, the culture that created such immense value? That's what we're here to do. We're going to dissect the anatomy of their success. So here's our game plan. First, we're going to look at the machine itself, get a snapshot of what they looked like at their absolute peak. Then we'll dive into the 3 core strategies that powered it all, how they invested in people, their one-of-a-kind manufacturing process, and how they exported that culture around the globe. And to wrap it up, we'll ask the big question, could this model even work today? Okay, let's dig in. To really understand the why behind that $100 billion price tag, you first have to understand the what. Just how dominant was SABMiller right before they were bought?
Now, what's so fascinating here is the whole picture these numbers paint. Yeah, over $24 billion in revenue is massive, of course, but look closer. A profit margin of over 24%? That's incredibly healthy. And being number 1 or 2 in 94% of the markets they operated in, that shows an almost unbelievable level of strategic dominance. They weren't just big, they were masters of every market they entered.
And this chart just brilliantly illustrates the payoff for their investors. A 115% return over 5 years didn't just meet expectations. It blew past what their competitors were doing. This company was a genuine value-creating machine. So how in the world did they build this thing? Well, it all started with a pretty radical idea about their most important asset, their people. They called it the Human Capital Proposition, or HCP. Now, this wasn't just some fluffy HR speak. SABMiller made a conscious decision to manage their talent with the exact same analytical rigor they used for their finances. People weren't a line item or a cost center, they were a core driver of value, an asset you could measure, manage, and ultimately sell for a massive premium.
And here's how they actually did it. First, they identified what they called strategic job families. These were the handful of roles that had a huge, outsized impact on the bottom line. Think a master brewer in a new market or a key supply chain manager. Then they used strategic people resourcing to go out and relentlessly find the absolute best talent in the world for those specific jobs. And finally, they made sure everyone, whether they were in Colombia or China, operated under one single high-performance culture they called the SAB way.
Okay, so you've got the best people in the most important jobs. The next step was to give them a world-class process to execute. And this is really where SABMiller's genius for engineering met the art of brewing on a massive global scale. This quote right here was their mantra. It wasn't just a saying on a poster. It reveals this core belief that drove pretty much everything they did on the operations side. They were obsessed with the idea that repeatable, excellent processes were the only way to get long-term, sustainable success. And they turned that belief into a system, which they called the manufacturing way. To enforce it, they built an incredibly powerful tool called GEM, which stands for Global Evaluation of Manufacturing. You could almost think of this as their secret weapon for making sure every brewery was hitting the same standard of excellence, no matter where it was in the world. So, how did it work? Well, GEM tracked 15 key performance indicators, or KPIs, which let them benchmark every single brewery against a global standard. But here's the really clever part. This wasn't just some top-down mandate from corporate. It actually empowered what they called natural work teams, the people on the factory floor, giving them the data they needed to spot and solve their own problems. It created this amazing culture of ownership. And the results? I mean, they were just staggering. This single system generated $200 million in savings in just 2 years. But it wasn't only about the money. They cut water usage by a quarter and boosted their packaging efficiency by 15%. This was a lean, green, profit-making machine. And that kind of predictable, data-backed performance, that's exactly what makes a company so incredibly attractive to a potential buyer. So now, let's see how this all came together in a real-world stress test. Back in 2002, they acquired the iconic but seriously underperforming Miller Brewing Company in the US. The big question was, could their system actually work there?
This slide shows the total night and day transformation. What they found at Miller was this passive wait-and-see culture that had led to years of decline. They didn't just tweak it, they completely ripped it out and replaced it with the SABMiller way, a true meritocracy, with ambitious goals, all designed to make employees proud of the beer they were making again.
The key point here is how they actually did it. They rolled out the Miller Way, their customized version of the performance system. They even built a pub called Fred's Pub right inside the brewery to get employees talking and reconnect them with the product. And this turnaround was huge because it proved their framework wasn't just for emerging markets. It could be exported successfully anywhere in the world.
So once you put the people, the process, and the culture all together, you can finally see the complete picture of this incredible performance machine they built.
I mean, this scorecard is the final evidence. $200 million in savings, an 8% dividend increase for shareholders, huge gains in resource efficiency, and near total market dominance. At the end of the day, the numbers just speak for themselves. This was a company operating at the absolute peak of its powers.
And that brings us to our final big question. And this is where I really want to turn it over to you. In today's world of agile teams, remote work, and much more flexible management styles, could a highly structured, intensely data-driven system like this still work? Or does it kind of feel like a relic from a different era of business? Or let's put it another way. Was the system's incredible rigidity the very thing that made it so efficient? And also, what made it such a perfect, predictable target for an acquisition? Did its peak performance, ironically, seal its fate as an independent company? It's a fascinating question about what it really means to build a successful business for the long haul. Thanks so much for joining this explainer.